All right. Good morning, everybody. We had a little bit of a bump last night. A big tech driver kind of ties in with that dead cat bounce. Take a look at the global markets, kind of ask the question, what happened while we were sleeping? So when we go over to Koipen, talks a little bit about the Nasdaq and the strong meta results. And again, kind of reiterates tech earnings buoy stocks as the yen slips. Gold kind of takes a little bit of a sell off. What you want to do in the morning is get a feel for what happened in the overnight hours while you were asleep. There's a lot of places that you can go to get that information without, spending a lot of money or even any money. Finance Juice is free. You just sign up for it, and then something like Koifen, um, also free. Both of those do have a paid version, but you don't need it for what we're doing. Just kind of taking a look around in the morning and asking, what happened in the overnight hours. There's a lot of times where the global market will respond to the kind of day that we had, and it just kind of that momentum carries over into the overnight hours. But then there's other times where they actually get the ball rolling and it's their momentum that carries over into our trading day. And just want to kind of get a feel for it. What you'll notice a lot of times is if commodities or technology or whatever, real estate, if that's what was doing good through Asia into Europe and then into our session, then that's very likely what's going to do good through ours until a catalyst or some other change event comes along and knocks that off. Speaking of change event, for today, we do have a lot of economics on the table, including job numbers, which are supposed to or are anticipated to be really low numbers, and that's kind of a good thing. The dollar just absolutely crazy nuts yesterday, and it doesn't look like it's done yet. We have a little micro double top we're going to take a look at here in a little bit, but yeah, the dollar it isn't done, and it's not backing off. Bonds did back off though, and that's concerning. We'll kind of get into that a little bit more. Right now, we're looking at FX Street. When it comes to the dollar, it really helps to have a why behind it. There are times in history where you'll see the dollar bid up and it's a good thing. And then there are other times where you see the dollar bid up and it is not a good thing. Well, how are you supposed to know the difference between when it's a good thing and when it's a bad thing? It's by understanding the why behind it. Right. When China locked down its richest citizens on how they could participate in the Chinese market, they yanked their money out, started buying the US dollar, and then started buying our market with those dollars. That was a good time. That was a good catalyst to see the dollar going up during that time period. It just showed that there was more and more participation in the US market. But then there's other times where the same trades are placed into the dollar because there's nowhere else to go. And a lot of those firms, if they go to cash, have to pay a fee. It's hard to explain to your investors that you were willing to take an 8% loss by paying a fine rather than taking an 8% loss because you tried to trade, right? If somebody tells me they lost my money and I ask them, how'd you lose it? Did you gamble it? Did you take a really amazing trade and it didn't work? Oh, no, I just got scared, went to cash and then paid a big fine. What? That would not sit well, right? So when they have to go to something and there's nowhere to go, you don't want to go to bonds. Bonds continue to sell off. Stocks nuts. Where else do you go? Well, into the dollar, right? So seeing it bid up during that phase would be more of a reflection of like a VIX style indicator, indicating that global sentiment is bearish or scared or looking for a place to hide. So when you can get some perspective on the dollar, it really helps. Things like FX Street usually has a nice little uh, excerpt about the dollar that you can read. We don't you don't need to read a book on it every morning. Just kind of a little gauge to see what's going on. You'll often find this market wrap on FX Juice or on Financial Juice. This is a little summary of Europe. If you continue to scroll back, I believe you would find a little summary for Asia as well. Just gives you a kind of a brief outline of what happened and or what could happen because you got to think about what time frame it is over in Europe right now. Midday. It's about 1:45 in the morning in Berlin. So or in the morning. It's 1:45 in the afternoon in Berlin around midday past lunch. So they could have econ, they could have people out chipping their teeth, news events, whatever. So this is a nice way to kind of get an idea of what happened, who's talking, is there anything in particular that we need to know, right? And so you'll find these useful sources of information, but it needs to be something that you're doing consistently. Every morning you come in and take a look, hey, what happened last night? What am I going to do today? Where should I have my focus? Is there a particular industry, sub-industry, sector that I need to pay attention to today? So it leads us in the right place. So we're looking at the ES. We're on the daily chart. We still have the linear regression line drawn from the last swing high. Uh, if you look at it from that point of view, we just had a really tight range that started to get a little bit bigger. Then a nice, like a 3% move to the upside, 3% move to the downside. Now we're pulling back in again. You'll find very often that markets stay linear, they stay balanced and coordinated. Things like an RSI indicator, for an example, an oscillator that goes from 0 to 100. If you see they tag the upper end at like a 90 or an 87, when it goes to the downside, it's very likely going to mimic the same thing. It'll stop at around a 13. Right? If it went to 87 on one side, it'll go to 13 on the other side. Linear regression, if you go to like a 2.5% on one side, you're very likely to go to the 2.5% on the other side. If it's tight and narrow, it'll be tight and narrow on each side. And it slowly starts to widen out because price aggregates. So we're coming back up. We're basically at the midpoint of this swing low, swing high. Everything that I heard when I got up this morning, I was listening to Bloomberg, just hadn't even made it into the office yet, just had Bloomberg on. And all he talked about is all the S&P and the Nasdaq are up. You know, the Nasdaq's up 2% this morning, blah, blah, blah. Yeah, it popped in the kill zone. Yeah, that 2 a.m. kill zone that we talk about all the time. It popped in the kill zone, ran till 4. It kind of faded up a little bit more, slow grind, and that's it. Now it's kind of selling back off again. So they made it sound, super bullish, and we should all be out here just uh, highly exuberant. But that's a kill zone pop. It's nothing. Other than that kill zone pop, which we very likely will give back, we're still sitting basically where we were Tuesday. So tamper down those exuberant expectations a little bit. Let's go into the market watch, take a look at what we do have on the schedule for today. CPI, GDP, jobless claims, and then we've got auctions. So 8, 8:30, 10:30, 11, 11:30, 1 o'clock. These auctions are really important. They are game changers. They can turn our entire day around. So keep your eye on the clock. Starting at 11, there is not expected to be a lunch today. Right? Normally we expect trend to end around lunchtime, or we expect a range to end around the backside of lunch. There is not expected to be a lunch today. We have 11 and 11:30 and then 1 o'clock auctions. The gas report, with the current situation going on in the energy sector, this could provide a little bit of catalyst to the market. I certainly don't want to say at this point that it wouldn't, but normal conditions, this would not be something we would be too concerned about. I wouldn't sleep on it. I would definitely be watching for the clock at 10:30, see if it's going to have any impact in the market. It's 8:30 that's going to be the game changer today. It's very likely could take the mood significantly higher or just throw water on everybody's little warm, happy place today. So 8:30, watch for an absolute shift in market sentiment. All right, so our expectations for today. We could continue to maintain this range. I find that very unlikely. But we have our Globex high and we have the low of yesterday. If we're that close, I would go ahead and recommend just taking it down to the low of the week. It's really close. It wouldn't, it's a negligible distance and it would be worth it for perspective. So we're talking 42.60 down to 41.40. That is plenty of room if we want to have that range defined. If you want to break it down into zones, zone one that I would focus on would be our own Globex today, right? From the highest point of Globex to the lowest point of Globex. And I would consider this its own zone. We very likely could maintain that range right there. Very doubtful, but it's possible. We don't want to say that it can't happen because it certainly could. That would be considered its own zone at the moment. If we put things into perspective, we've got an inside day breakout. We broke outside of yesterday's price action. So that's where we're at currently. Will we keep the inside day breakout is kind of the question, right? So one thing we could do is maintain in between this zone or this range. That's thesis one. Thesis two would be that we break through our own Globex high and continue this move to the upside, focusing on the open from Tuesday. That's the RTH open. That would also tie in perfectly with the Globex low of Tuesday. Then we would focus on a right around the Globex open of Monday night, Tuesday, and then all the way up to the Globex high. Along the way, I would add in Monday's RTH high. Put those together, we've got a pretty good picture to the upside. We're looking at 43.03, 42.95, 42.88, 42.67. There is a wide area where we don't really have a lot of pivots. You can look back and see that we've continued to move through that area a lot without a lot of resistance. So it's very likely if we go look at the volume profile that we're not going to see anything there that would provide such resistance. Take a look and see. All right, so we're looking at the volume profile. 10-day, 30-minute. We're back inside the box. Look at the size of the box now. Been pointing it out for the last few days, how it was really narrow and compressed against the top of the range. That there was the bulk of all of the volume was sitting in the higher portion of all of this, right? It's been there for a few days until yesterday. Now, we didn't bring the point of control down to us yet. That point of control is still sitting up around 44, 41. The point of control is showing where the highest amount of volume is located in the last 10 days. So we haven't outrun that yet, but the level of volume that we have around 42.11, that cog line, is significant. It is the second highest area, or maybe the third highest area of volume. So a very large amount of volume down here. We're bringing it in, right? A little bit at a time. When we look left and try to identify, is there anything that we could hit on the move up, where we talked about that shallow area where price is likely to move through it relatively quickly, there's not a lot there. So between 4,300 and 4,240, basically where we're at right now, we have two very large examples where price just ripped through there, and it's a very shallow area, no volume resistance. We do start to see that volume resistance at right around the area where I started drawing all my lines, that 42.93 area. We've got some volume, and then 42.78, we happen to have some volume. Put it out on a 5x5. It's a 5-day, 5-minute chart. You can see we have an untouched point of control underneath us. Definitely want to keep track of that point of control, because when we get to the thesis where I start talking about the downside move, should we get to that point of control, there's very likely going to be a reaction in the market. The ADR right now is very close to 2%. So from our current location where we have already made a 1.5% move, we would be looking at adding another 0.5%, and that would be considered a normal day. Well, we still have 10 hours to go. We still have 10 hours, so we could make, the ADR plus some. Just getting back up to our own Globex high would get us close to that 2% ADR. So anything beyond that is going to be more than the day's ADR. We can certainly do that, right? The ADR is not a cap on price. It's only looking back and asking, hey, in the last 20 days, what was the average daily move, right? And the average daily move for the last 20 days, if you were to add every day up and then divide it by 20, because that's how you do average, you'd get about a 1.95. That's been the size of our daily move. So if that's been the norm, if the last 20 days have been moving around 2%, then we have a pretty good idea that today is likely to move at least or near or around 2%. That's where we come up with that stuff, right? Things like ROC have been around since like the 70s as a major thing that's used in the market, and it's used in everything. Old, antiquated, generic, but it's still, that's what everybody uses, right? ROC, rate of change. It's always rate of change. So could we hit those previous levels we talked about and make it up to 43? Yes, but we would be beyond our ADR at that point. So if we take the 1.3 and add it to the 1.4 and just kind of fudge the numbers a little bit, we're looking at nearly a 3% move on the day, right? That's basically what it comes down to. A nearly 3% move to the upside. So what if this bump to the upside was nothing more than the kill zone pop, and the numbers come out this morning, people kind of freak out, don't like what they see, and we start making our way back down? First, we give back the 1.4, all right? We get through our own Globex low, and we begin focusing on yesterday's values. From our current location, if we get back to 1.4, that puts us back to 41.82. From there, we start adding another 1%. So we'll go from 1.4, which would get us to flat, to 2.4. And that would get us to the low of Tuesday, that low that I said keep track of and add it to it. That's 41.40 area. That's a 1% move to the downside. By that point, we'd be negative 1% on the day. We've got a 2% ADR, so we want to add another one onto that, right? Kind of back up. That's 245. We need 345. That puts us at 4101, spot on, right to that critical level that we've been mentioning quite a lot lately, 4100. I'm not saying we're going to 4100, okay? But we now have our top side and our downside levels marked out, where things could get a little bit nasty and things could get overly exuberant if we should start breaking to the upside. It's just a clear idea of If we get bullish, where are we going? Made the mistake of grabbing that line on that time frame, and it adjusted the line. Stupid thinkorswim. Leave my lines alone. All right. For the Nasdaq. This is my baby. The curve here is a little more sloppy, but it still lines up. Linear regression at its finest. High, low, right? Back and forth, high, low, high, low. It got a little extreme here, so it got a little extreme there. And then it didn't make the swing like it should. It actually muted, stalled, and gave another very large, exaggerated move. You could argue that if you're looking for the reciprocation or the matching movement from one side, like if that is a 3 or a 3.25, 3.5% move from the linear regression line in one direction, that this low had not yet matched that move. And so it gave another shot at it and finally did get the move there. So you could argue that this move was owed to us all along, and that little pullback right there before it ripped and then dropped was a little bit of a fake out. Yep. Well, good morning, Mr. Marcus. Um, guys, you're gonna have to give me a second. I gotta let the puppy out. I'm just gonna kick the door open for him. He'll be all right. I'll be right back. All right, I'm back. Sorry about that. We put in sliding glass doors last year in my office that go outside, and yet he's not used to them, so he still goes all the way to the kitchen to be let outside. That's funny. So, looking at the linear regression line, we've just come back across it. There's plenty of movement to the upside that could happen. And if you look at the failed attempt that I was pointing out a little few minutes ago, that low and that high kind of resolve themselves on each side, and that the bigger move has also been resolved on each side. So it's basically back to kind of like a ping pong match. Throw it from one side to the other. They could say the ball's in your court. Well, the ball's in the Bulls' court. It's on the upper side, and it's a fair shot since both sides has already been matched. We're now looking to see what are we going to get this side. Will it be another muted move, or will it be a more extreme move? We don't know yet because we're starting fresh. As usual, we have three possibilities. We could stay range bound within our own Globex range. I find that very, very unlikely. We could stay range bound within yesterday's trading range. I find that more likely. We could get bullish and break through our own Globex high and begin making moves to the upside. Now we are up, or we're up nearly 2%. So getting through our own Globex high would put us at like 2.5. We've got an ADR of nearly 3%. So 2.5 is not extreme. considering what the average is. So from that, if we add another, that'd be 2.5 at 0.62. So we'll go to 162. That's adding another 1% on top of that. That's a 3.5% move. And it gets us very close to the roundy at 13,500. If we got that close to the roundy, I would think we would gravitate right into it. So the top side target would be 13.5. That's a little extreme considering we only have, around 10 hours left. And we have at this point a little bit past half of that move. So we would still need we'd need more. I need more. So not yet. It is possible. It is in reach, and it wouldn't be that extreme, right? Considering the kind of market we've had and looking at how violent yesterday was on a day like that, where we're just winding up more and more and more and more energy. The German, uh, what do we got here? HICP. So we got some econ this morning, just came out. May or may not impact. I don't think that one's going to impact us that much. We'll have to see. So 13.5 would not be some wild, crazy, extreme move, right? Considering how much energy we built up in the last 36 hours or so. So the third scenario would be, well, what if we get bearish again? What if everything starts to get really negative? We are on an inside day breakout. You can see we are above yesterday's level. So there is that. If it fails and we get back inside of yesterday's range, we're then going to focus on that opening tweezer top 13.2. We happen to break through that, then we'll focus on this major pivot point at 13.1. Below that, we start getting into yesterday's levels, like yesterday's open, the RTH open. That's at 13, call it 13 flat. And then yesterday's low. It might be worth looking into the Globex low if you can see a significant difference between the two pivots, but I guess that's not even the low, is it? So we definitely want the Globex low, which happens to be below 12.9, and we want the RTH low, which happens to be around 12.925 ish, right around in there. So plenty of pivots to the downside to be focused on. Could look at that pivot minor. I would want to check it on a volume profile to see if there's any validity to that line. You don't want to just draw a line just because we happen to see a pivot point there, right? If we draw it there, we at least want to go find some reason to validate it other than just, well, it had a pivot and it touched it there too. So that's not good enough, right? We want to put a little more validity into it, or at least label it as some form of pivot minor so that you know that it doesn't have any validity to it yet. That way you could anticipate there may be a reaction there, but you wouldn't expect to see a reaction, right? If it just passes right through it, like, well, okay, guess that line was not very valuable after all. So looking at the volume profile, 10-day, 30-minute, we are outside the box. We've been outside the box. The box is much, much bigger now than it has been in the last few days, and we're very close to being back inside the box. We've been working back in that direction for quite a while. We're still underneath it, and for the moment, we're actually moving away from it again. Right, so we rejected off of the value area low and have pulled back. This inside day breakout is sitting on shaky legs, and the entire rally started with the kill zone move between 2 and 4. Boy, I hope that consumer spending numbers turn out pretty good. Boom, boom, boom. All right, looking at a 5x5. We have an untouched point of control from yesterday at 13.12. It's really close to 13,100, but there could be a reaction when we get there. It's worth keeping an eye on that one. Other than that, there's one really far away that I don't think we're going to have to deal with today at 13.7. I mean, that would be a wow move, right? We go to 13.7 today. Wow. We don't want to say that we can't go to 13.7, but I would say it's very, 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 very improbable, right? In statistical language, they don't say, no, that's not possible. They say things like, no, it's improbable. Yeah. It is worth asking the question about the weekly expected move. Where are we? You can see on the Nasdaq, we actually breached the expected move to the downside on Tuesday, and then we rallied back up through it. The gray line that you see there is where we closed last Friday. Friday's pivot points, or the weekly pivot points, are very valuable pivot points. We're talking about the weekly high, weekly low, and weekly close. They're just as valuable as a daily high, low, close. The weekly open is another one of those pivot points as well. Open, high, low, close, and pivot points. If you think about the floor trader pivot, right, it's a high, low, close divided by 3. So it's like an average of price. So if we're underneath last week's floor pivot, or we're underneath the floor pivot on the weekly, then we're below our average price. When things are cheap, people like to buy them. If we're above it, then we're above our average price, right? People look at something and say, it's overpriced. I gotta pay up for it. I don't want to pay up for it. It's not worth it. It's worth noting where we're at. If you see aggressive buying and we're above the average price, then you know that people want it so bad they're willing to pay up for it. It also provides context with the weekly pivots in play. You can kind of ask that question: are we moving closer to the weekly pivot, or are we moving farther away from the weekly pivot? To find that pivot, just go out of Thinkorswim and type in the word pivot, and you'll get the indicator called a floor or pivot points. Thinkorswim doesn't call it a floor pivot. But if you look at the math that it uses, high, low, close divided by 3, that's the floor pivot, right? They may not call it a floor pivot, but it's the floor pivot. If you don't want that one by itself, you can use something like the SVE pivots. That would give you the same pivot point as the other indicator, but it also has yesterday's high and low put in there, which is kind of nice because then it marks those levels for you as well. And you didn't even have to do anything. Well, the default on it is day. If you swap it from day to week, now you've got the weekly pivot. Simple enough. So that yellow line would be our weekly floor pivot. I don't like that style where it breaks it down each day, giving a weekly calculation. It's basically saying counting back X amount of days for the weekly. I want one that puts the line on there for the whole week in one spot. That's why I use my own personal homemade indicator, and it does the same thing. You find that indicator in the Discord. Just search for pivot points. Notice it's a weekly pivot point and it's drawing the line for the whole week, not each weekly line having its own area. I don't like that. The reason why is if I were to go out and do a high low close math on a weekly candle, I get one number. That number is for a week. I would mark that line out for the whole week. I wouldn't go out every day, count back 5 days, run all those together and count that a week and then draw a line for that day. It's madness. Or maybe I'm just lazy. All right. So we talked about that move in oil or in energy. It wasn't just oil yesterday. It was violent, but we're just maintaining, right? Those lines that you see on the chart are from an indicator called the voodoo lines. That green line has been a solid level of resistance, and we still haven't made it through there. Okay. But that's 103 area, solid as a rock. We just have not breached that level for a while. Bonds are starting to break down again. Keep your eye on those. We start to see bonds break down, interest rates go up. Nasdaq does not like that. It's going to feel the brunt of that move more than the S&P, because the S&P has financials in it. The Nasdaq 100 does not have financials. So the Nasdaq's not going to like that move, which is why when we see stocks and bonds moving in the same direction at the same time, it's odd, right? It's like it's not supposed to do that. Why is it doing that? Dollar continuing to be a bit extreme. It may not seem extreme. I'm telling you, it's an extreme move. Look at this. Is the dollar is going parabolic, right? Now this is not like the US dollar. This is the dollar index. Big difference. This has the euro in it. It's got all kinds of things in it. It's an index. We still recognize it and refer to it and discuss it like it's the dollar. It's not the dollar, right? But look at this is getting extreme. Really pay attention to this thing. Uh, things that go parabolic and extreme are often in a last little hurrah before it dumps. Yeah. Tasty Trades went all around the United States promoting a trade strategy called the aggressive contrarian trade setup. What did they focus on? Crap that went parabolic and shorting it. Yeah. So, when you see something like the dollar going just all kinds of bonkers like that, think about when it stops doing that and does the other thing being dumped back down on our heads. Interesting enough, this morning, Bitcoin is not responding to the sell off. Bitcoin is actually signaling to us that this sell off isn't going to stick. Now, you can look at that and try to lean into the idea that Bitcoin is not signaling the sell off, or you can say, well, it just hasn't responded yet, and it's the last one to know, which means you'd have a really good short opportunity in Bitcoin because it has not yet made the move. I think you'd be better off looking at it from that point of view than looking at it and saying, well, I don't think this sell off is going to stick. Either way, keep your eye on Bitcoin because it's unusual to see that it's not responding to this move. Bitcoin has been a leading indicator in the last few days, or at least a confirming indicator, a strong confirming indicator to validate whether a move is going to stick or not. Seeing it not respond to this sell off at all, not even a little bit, gets my attention. Even if I don't know what I want to do with it yet, I would at least point it out and say, look, this is another one of those things that is doing something it shouldn't be doing, or it's not doing something that it should be doing. That's a good way to say it. We've also got a significant rising wedge. And if you don't know how that movie ends, you probably want to go study some candle patterns. But I can tell you it is not good, right? If you were to measure that not good, you would want to use something like the widest point of the wedge. And after measuring that distance, you would then use it to plot your target, right? Almost every pattern out there has a known way to calculate its measurement. And the really cool thing is without ever having to read a book, God forbid everybody, a book. No, I don't want to read. Can you just give me a video or something? How about pictures? I like pictures. I get my crayons, my hat on, you know. Oh, rising wedge. If you just go to Google and type in whatever candle pattern it is that you want, and then click the word images right there, right there, right there, you'll see that it already has it for you, right? And then it will explain with pictures, ah, how to measure it like that, right? Wait, wait, what? Do it again. So plenty examples. No reading required. You just look at the pretty pictures. It'll explain exactly how to measure them. And it's not just head and shoulders and cup and handles. It's all of them, right? Cool, cool. Yeah, you like it. Now I got to get out of this large screen mode, however that happened. Get me out. So that just about covers everything that I wanted to hit this morning. We could add in the FIA. Apple's got earnings today. That will be something to keep an eye on today. And if you actually listened to the report on Facebook, it wasn't that good. They're not managing their money really well. They're just not wasting it as much as they were going to waste it or have been wasting it. And the main pop came because they found some subscribers. Okay, I mean they're still not managing their money well, but hey, we'll take what we can get when we can get it. If it wants to make that kind of move and kind of maybe come up towards where I've got a butterfly sitting, that won't bother me all that much, right? Because I got a butterfly sitting right around in there. I'll take it. But it's got a long ways to go before it gets to me, and it's not likely to stick. So, oh, messed that up. It's got a long ways to go, yeah. We are primed for some a strategy that I like. It's called a red to green. So with a red to green, you need a red candle yesterday. You want to see the market closing in the lower portion of that red candle yesterday. And then in the pre market on today, you want to see it closing or opening higher than yesterday's open, right? It's kind of a key point. You want it higher than that. The idea would be if everybody gets bullish and we start rallying to the upside, is we want to get outside of yesterday's range. If we get above that, that becomes the resting point for a little bit of a Busby. The nice thing is if we open above yesterday's open, that becomes some support. That way, after the market opens, if it starts to fade back, it's likely to find support off of that yesterday's open before continuing that move to the upside. Red to greens are a really nice trade setup. They're easy to see, they're easy to find, they're easy to play. What you don't want to really focus on, and I shouldn't be showing you this on on Nvidia because it doesn't really fit. This is a downtrend. You want to find a red to green in an uptrend, right? So if we were to look at something like, say, Dollar Tree's been in a really nice uptrend, and it had a red day yesterday, and it closed in the lower portion of that red day yesterday. So in the pre-market, if we see Dollar Tree rallying up in the pre-market, we want to see it get above yesterday's open. It doesn't have to, but we want to see it get above yesterday's open before it opens today so that it could provide that support we were talking about, right? If we don't get that, then instead, as we come into the open, it's got to break through that resistance. And a market that's open will respect that resistance more than a market that is not yet open. It'll be easier to move through that level if we're still closed. It's less resistance if we're closed, right? So if we're not through it by the open, that becomes resistance. Then we got to get through it. We get through it and get on the other side. We might find that Busby that we're looking for. Still got to focus on yesterday's high, so that we'll then have two trades. We'll have an R2G, and we'll have an IX10. That's 2 trade setups, right? Inside day are IX10, R2G. You start stacking them all up. You even have a little bit of a trend line breakover, right? It's not a significant one, but that would be yet again another one, right? But we would need to see that pre-market rally. And right now, Dollar Tree is not showing much of any kind of volume this morning. Nothing significant anyways. But that would be the red to green setup. It doesn't have to be in something like Dollar Tree, but I would recommend that you focus on things that are already in an uptrend. That same setup can work on things that are in a downtrend. Say something like this. There was a red to green that went the wrong direction. This one actually gapped down even more and then ran. We want to see. I don't have a good one to show here. Boom, boom, boom. I think you guys get the gist. There's also videos that I've made on the bullish bears on this. It's in the strategies portion of the next level library. There's an example of one. Closed in the lower portion, opened at the open of yesterday, and then rallied up. It had an inside day breakout, but it failed to keep it, and then it fell back down again. We wouldn't care, right? Because as a day trader, we would just get ours and then whatever, let it do what it's going to do in the afternoon. Still that red to green setup, and it can lean on yesterday's pivot points, which is nice. So when you see things that are up in the pre-market, go out to that daily chart to kind of ask that question: is there anything out there that I might want to look at, focus on for an opportunity? Speaking of things that are up in the pre-market, let's go ahead and quantify that. We want to look at the sectors that are up in the pre-market and by how much, and which ones are down, right? Kind of give us some perspective of the other direction. TLT is down, IYR, silver, the devil's metal, natural gas, those are the ones that are down. Things that are up, just about everything else, right? So let's kind of hop in and look at semis. All the semis are up this morning. Look at the EV market. Ford missed and still went up this morning. If you compare the way that they're managing their money to GM, Ford dropping the ball, but their positive outlook was good. And so Ford is up this morning. All the EV names, except for one, are up. Cryptos, we have some that are flat, not really moving around too much. Otherwise, most are up and by a significant amount. So it's kind of across the board, right? Most of the sectors and most of the uh, little subsectors that we focus on, kind of breaking things out into their own little sub industry, everything is looking really good this morning. On a day like this, you could lean into the sectors as your uh, opportunity, right? You don't have to lean into your own watch lists. So it's nice. You can use those sectors as your guidance. Everybody have a good day. Be careful, be safe. I will see you all tomorrow.